Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for October 24th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 363. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today I have Michael Filighera back to moderate. You should be seeing his screen right now. Also joining us is Sonny Harris and Wally Olopade. So I'm going to go ahead and turn it over to Michael.
Thank you very much, David, and good afternoon, everybody, and good morning if you're a West Coaster like some of us. Today is going to be, I think, a very, very interesting conversation. We have a lot to discuss, a lot to go over, and so we're going to dive right in. And how we usually begin is we do a round robin, and I'm going to start with Sonny, and then Wally, and then myself, and we just introduce ourselves, and I'll give a little bit of a background. So beginning with Sonny.
Good morning. This is Sonny Harris. I sponsor a website, moneymentor.com, where I put everything that I ever want to know and do know. It's a kind of a search process to get through there, but it's all free. I do a Sunday night free newsletter called The Sunny Side of the Street. I have a free live trading room every Tuesday morning, early. And what else do I do free? We do free webinars and seminars and forums. And you can find out everything at moneymentor.com. Oh, and I'm also a trader. I've been trading now. It'll be 42 years in January.
Wonderful stuff. And thank you. And Wally.
Yes, good afternoon, everybody, or good morning, wherever you're listening from. Yes, my name is Wally Olopade. Been trading the stock market for about 10 years, going on 11 now. I focus primarily on what you consider to be quantitative analysis as well as technical analysis. I've been using that to help me pick tops and bottoms in markets. So when you hear people say there's no way you can pick the top or you can pick the bottom, I disagree with that. You might not pick the absolute bottom or the absolute top, but you can tell when you're at the top and you're at the bottom. And so we've been able to do that. We have been able to call the top before the pandemic. We call the bottom of the pandemic, call the top of this year in cryptos. We call the top of this year in gold. We go to the top of the S&P 500 and a lot of many stocks, Apple, Tesla, and so on and so forth. And, that's kind of like what we do. And so my company is called Right Side Trading because my whole thing is you got to be able to analyze the right side of the chart and anticipate what's going to take place going forward, because that's where you make money from. And so that's what we do. We've been doing that for years. And my website is rightsidetrading.com.
Thank you very much. By the way, when you say right side of the chart, that's the price.
That is correct.
And that's what we follow. We follow the price action.
That is correct. Excellent.
That's how we determine. I thought I want to make that very clear for people so they get an understanding.
Yes, I like that. Thank you.
You're welcome. And I am Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And I've been trading for over 40 years. I started here in San Francisco on the Pacific Exchange as a market maker. I've traded on a couple of continents, the US or the North American and the European. I've traded here in San Francisco, London Traded Options Market, the European Options Exchange in Amsterdam, and the DTB in Germany before coming back to the US. Currently, I do have a trade room. I also have a couple of channels on YouTube where I present a daily update. And then I also have started and now presenting a podcast, and it's called Eye of the Storm Podcast. And so a lot of things on offer. But we're going to jump right in because I think enough about us. Let's talk about the market. And there is so much going on, and there's so much to try to include in all the decisions that I think that people are really getting twisted and turned around. So we normally start this particular show with having a discussion on where the S&P 500, where we feel it will close between now and Friday. Today's opening was 37.77, I believe. and let me just double check. It opened at 37.71. So the question is higher or lower on Friday than 37.71? And again, we'll start with Sunny.
I think we're going to close lower. I think it's, in my sunny side of the street, I said, I think we're going to, last night, I think we're going to go lower, but there is kind of a double bottom. Oh, that's gold. I'm sorry. You better look at the ES.
That I am looking at the ES, yes.
Which is kind of up from a double bottom. I still think we're going to go lower.
Okay. And if you were to give a probability or just a confidence in that, what percentage would you say?
Well, because I'm not sure that it'll make it by Friday. That's my only hesitation. There's the 20% what I call my recession line is overhead, and I would not be surprised if the market tries to make it up there and then moves on down from that point. So I don't know. We've got 4 more days after today. I don't know if it's going to make it by Friday or not. I think we've got about 50% chance of it going up to the 20% and then back down.
Yes, and I do think that that's very fair, 50-50, because there's too many things to really push it much beyond that. Wally.
Yeah, so very interesting. I totally agree with what you guys are pointing out as far as like there's so many things going on. But from just a chart and data perspective, we literally just got a buy signal on the daily time frame on Friday. And so because of that, I'm expecting some type of an uptrend for now. Okay, now I don't believe that this is the bottom of the bear market. So I'm not calling the bottom of the bear market yet, but I am saying that some type of relief rally, which I believe could last to the end of this week. So when you ask that question, do we see it higher or lower by the end of this week? I will be betting more on the fact that we're going higher for this week. That will at least close higher than where we opened this week. And then, but I don't believe that this is what's going to take us to new all-time highs, and this is going to be the end of the bear market. We are still in a bear market, to be very, very clear.
Right.
And so that's what I see. And the probability of that, I would say I'm like 90%, sure that we would end higher this week.
Okay. Or above 37.71.
Correct. Above 37.71. Not, again, I'm not calling the bottom of the bear market.
Right.
I'm not saying the bull market is here. I'm not calling that at all. But I said for this week, a relief rally. And that's all it is. It's just a relief rally. We should be
and again,
above.
I'll support you on that, because if we're just taking a look at my screen, and I am an Elliottician, so I follow Elliott Wave. I also do Elliott Wave. I have a lot of experience in that area. And regardless of what I think the market may or may not do, when my wave pattern tells me we got a rally in the making, and it actually, in my opinion, started on October the 13th.
Correct. I agree with that.
When we got that CPI number, which was disastrous.
Yep.
And had the market come in, pull into a low, and then turn it and absolutely roar higher.
Yeah.
Now, with all of that going on, it's forming a corrective pattern. Now, that means that it's going to form an ABC. And so this actually is a new labeling for me. I had been putting this in as an intermediate third wave bottom low on that October 13th, which would put this into an intermediate fourth wave. And that intermediate fourth wave does suggest, and we're already kind of pushing up into those levels, that you're going to get a retracement, or you're going to get a move about 618 to 70 to 100% of this other wave. So I have the A wave, the B wave, and now looking for the C. If we come in at 100%, it's going to be 39.16, of course, is going to be higher. Now, what really is kind of holding this up and maybe preventing it from getting much higher than we already are, in which case then I would consider the current rally a failure to reach its potential. And so, like I started when we were talking previously, I do believe that there are so many things out there around the globe that could just be triggers to absolutely turn this market on its heels and go in a totally different direction. Right now, I believe that I would give the market to actually, so my take on this is I would say higher based on my Elliott wave count and based on where I feel that the market right now is tending to gravitate towards, and they're gravitating towards the earnings reports that are coming out this week.
Mhm.
And we have Apple, we have Amazon, we have Meta, we have Microsoft. So we got the big boys, the big titans coming out. But I also, and maybe you guys have heard some or you've not heard some, there's a lot of narrative also going on. And that narrative is that the market bottomed here, which I would say, yeah, but only temporary. I do not believe that's the ultimate bottom. And so based on that, they're calling for much higher levels. They're calling for the Fed to pivot. And that is now pulling in a lot of people to put their money back into the market, into these Apple, Amazon, Google, Meta, Microsoft, etc. Now, particularly what I'm finding interesting, we're seeing Meta today opened down 4 or 5, and now it's up almost 2. So the volatility in the market is remaining very, very strong right now. In fact, they're still again trying to push it back below 30, and I think that it's really just kind of being trying to force it down there, and they're having a lot of trouble keeping it at that level. So,
Michael, my 20%, I just looked at it, measured line, the recession line, as I call it, is at 38.67.
I got
So
one there too.
I think the bounce could go to that level,
Right.
and then come down.
Right.
But
And you know,
like I say, I don't know if that's going to happen before Friday or not.
I actually think it will, because we have Apple and Amazon on Thursday. We've got Meta, aka Facebook, on Wednesday, and I think Microsoft is tomorrow.
Yeah, you're correct. Microsoft is tomorrow, I believe.
So I think once we get all that out of the way, that may take us right up there, Sonny. Because I also have that same level. Mine is a little bit different fib level, but it's a 38.57. And then above that is 39.16. So, and as I presented in my updates, it could literally go anywhere in between. Once it cruises above this 618 level at 38.07, anything above that can finish it. It's going to be dependent upon the actual wave count. And I'm just quickly going to go over that very quickly, because it's not really the purpose of what we're trying to talk about. But right now I'm in a C wave. All C waves comprise 5 waves. I got 1, 2, 3, 4. We're in the 5th, and it's already full of surprises. This little downturn right there just had to, right after the opening, they just sold it and dropped it, which made me feel that that could have been a failure to make a new high, and just would have just continued. But nope, they turned it around and they brought it all the way back. So we got a lot of stuff going on. Somebody's asked a question, and the question is, since you mentioned Meta, which I did, do I think that after the earnings are announced at the low of 122.53 will be taken out? Quite frankly, yes, I do. I think that Facebook, aka Meta, whatever we want to call it, they have a lot of problems that have gone unresolved, undealt with. And now you're getting nasty letters published on what Zuckerberg and crew need to do before they need to reinstall or just put confidence back in to their ability to do what they need to do there. If we take a look at the stock has dropped, has lost over 60% of its value. That's huge, folks.
Yeah, that's very huge. And if I might add to that too, as far as that question that the gentleman, the person asked, I'm not sure, I think it's a gentleman. Even if, let's just assume that earnings comes out, people get excited about earnings, it pops up, it's not going to last long from, like you said, because there's just too much, you know, like you said, as far as what's going on with Facebook, there's a lot that they need to clean up. That one earnings is not going to make it all better. Does that make sense? And so, but then again, just looking at the charts as well, all you have to do is like something similar to like what happened in last earnings in July, where for about 2-3 weeks, it kind of rallied after earnings, but then eventually it came right back down again. And that's kind of like what I expect to happen. So even if we get a bump because of some kind of exciting news or stuff like that, there's just from the technicals, bigger time frames, it's just there's so much damage done that it's going to take a while before this turns around. And right now, there's no sign that anything is getting better. So again, yes, earnings might come out, and earnings, even if earnings comes out well, it's still going to take a while before that turns around. So I agree with you, Michael, that this earnings comes out and it's just a matter of time, but it's going to go lower. Is what I'm seeing.
Since we're talking about metaverse, Sonny, can you kind of take a peek at your Sonny bands?
You betcha.
On metaverse, and then we'll all have chimed in on what we think about these earnings.
Do you want me to share the screen or just look at it?
You know, yes, let's, because I think it's more effective. Yep, you should be able to.
Okay, very good. Thank you.
There we go.
On this green chart, we have Meta on a daily chart. And if I squeeze this up a little bit, you can see, if I can, with Zoom. Well, let's just talk about it without squeeze. There we go. All right, so you can see here's the high, and it just goes down, 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 down. Somewhat slowly, but it's still going down. Over here at the end, see these green bars down in the histogram? That's a buy signal, which will be confirmed by the Sunny bands when a blue bar on my charts comes up above the lower Sunny bands, which it did right here. So that is a buy signal right here on Meta, even though it's continuing to go down. What typically happens at this kind of configuration is it will come up to the this purple and gold lines in the center. That's my dynamic moving average, and it'll come up to that level or possibly even go to the outer bands, but not much further.
Okay.
So that could pop up on earnings right into here, which is what, 144, 145, right in that area.
Right. And we've kind of seen that in some, not necessarily here in Metaverse, but we've seen it in other stocks where they just run it up and then it slides right back down. And so, yes, all things are possible here. And
here's a run from the lower band, run up, come back down, run up again, come back down.
Right.
You know, it will continue to go up to this midline, as I call it, and fall back again.
Right. Since we are having the larger companies, can while we have your Sunny bands up or your charts up, can we take a look at Apple, which reports on Thursday? Again, let me preface this by saying that of course, every last one of these stocks is a member of the S&P. So I think what happens to them will also help the other call that we're trying to make. Will it close above or below 37.71 on Friday? So Apple, yes.
See this red line that goes across, that says 20% right there. So that's 20% down from the top. It's hitting that right now. So of course there are two scenarios though. It could either come back down from that. Oh no, yeah, it's 20%. It's either come back down from that, or if it goes above that and continues on up, it'll go to the top Sunny band, which is 157.5. So we're at 148 to 150. That's almost 10 points that it could go. but it's
and we
below
have
the
seen it on,
200, below the 50, but now
right,
it's greater than the 21-day moving average.
okay. And we have seen Apple react 10 plus points on earnings.
Well, you see
So-
here though that the other thing's true. See, as it's going down, hits the midline, goes down, hits the midline, goes down. Here it's hit the midline again. Chances are it's going to go on down, but it'll probably go up
Yeah.
on earnings and then down.
Yeah. What I will add, and then Wally, I'm going to ask you the same thing about Apple, that what I find so interesting is Apple's one of the first corporations that actually came out with forward guidance due to inflation, due to interest rates going up. And initially the stock took a hit, but they bought it right on back.
Mhm.
And I feel that a lot of it is based on what I call false narratives that somebody's putting out there because that's what sells airtime or whatever you want to call it. But
Right.
I find that when they start talking about, well, the Fed's got to pivot, you know, we need to rally. Fed's got to pivot, and it's like, why? And just to kind of, I'll hold off on that because I want to talk about interest rates in a moment. So Wally, any thoughts here on Apple?
Yeah, very
screen,
very
Wally?
interesting. I'm sorry, say that again.
Here, I'll give you the screen.
Oh yeah, that's fine. That's not a problem. How do I work that? Let me see.
You go
Down
back
at the
under
bottom.
that green share screen.
Share screen. Okay, let's see. Let me make sure I'm doing this right. Can you see my screen here?
It'll come on. There you go.
You can see my screen now?
I can.
Okay, great. So this is the weekly chart of Apple. And one of the things that we look at is the fact that this red background here tells me that, you know, Apple is still struggling. Okay, so yes, it has a green candle, which is what happened last week. And we're expecting to see something happen. Now, one of the things that most people are not aware of is usually on a seasonality basis, when Apple goes into earnings, we can see this from this over the last 10 years, we'll see that there's a slight rally that goes into Apple's earnings. And so that's what we're seeing over here is that this is Friday. And so we're expecting things to kind of creep up higher, maybe go slightly lower. And then, you know, but at least from now to the first week in November, it's not impossible. Like the chances are very high, let's put it that way. The chances are very high that Apple will go higher. Now, I have to preface this with the fact that, look, we were in the bull market for the past 10 years, okay? So considering the situations that we face in right now with inflation, everything going into bear market, so we got to take this slightly with a grain of salt that, yes, we know that Apple's been doing well around this earnings period over the last 10 years. This time, it could slightly be different, okay? But then when we go back to the chart, and I'm seeing that, you know, things are still looking bearish, and I can tell it's bearish because of this background. This just kind of tells us the overall market is bearish there. Then the only other thing I can try to do is say, okay, is there something happening recently that should make us start saying, hey, could it rally for that earnings? And so this is the daily chart now. You can see that this background has just turned green. So this tells me that there's money beginning to flow into Apple. And could this lead into is it because, I mean, especially now that they know that earnings is coming up, why would money be flowing in, you know, if they didn't think that things are going to be positive, so to speak, okay? Or is it just people just behaving like they've always behaved and algorithms are just kicking in and saying, hey, earnings is coming up, stop buying before earnings comes out. Right. Either way, this tells me that get ready for some type of a rally. I don't expect it to last long again, but you know, considering that overall market is turning bullish right now, like you mentioned, Meta went down, it's coming back up. Apple has earnings coming up. Microsoft has big companies that have earnings coming up. I'm not surprised that there are people trying to jump in anticipation of this earnings and say, look, even if we get a quick pop before we, you know, sell everything and get back out, that seems like what's possibly happening right now, okay? Right. And you can see right here, this very last candle here on Friday told us it's time to start buying. So there's buying beginning to take place. And one more thing I'll say too, Sunny hit on this earlier, and that was the fact that we had this double bottom. And we can see this double bottom over here. Take away this green candle that kind of threw everything off track. But if you just look right here, that is a classic double bottom. that seems to be trying to make some waves. So again, on the short term, I expect a rally. Long term still has a lot to prove to convince me that we're back into a bull market.
And thank you, both. How I feel about it is that Apple actually has like I said before, one of the first corporations to actually come out and discuss forward guidance as it relates to higher interest rates, inflation, et cetera. They've also reported that a lot of there's one analyst, I don't even know who he's with, but came out and said, oh, the iPhone 14 sales, very robust. I'm not sure where he got that data from, because what I'm hearing is that they have cut back production.
That's what I heard too.
Because it is not robust. So again, it's who's out there spinning what narrative produces what. Now, one other thing that I will add, which again can produce a false picture for us, and that is if we go over and Wally, go ahead and finish.
Yeah, let me switch the screen. I mean, I don't know how to switch the screen back to you. What do I do to do that?
You just stop your share.
Okay, so how to
perfect.
Okay.
Sonny, what I mean by forward guidance is actually when they, during the earnings call, they most of the time they come out and they give you forward guidance. We expect sales to be this, we expect, et cetera, et cetera, et cetera. And sometimes they guide up and sometimes they guide down so as not to have a big disappointment. So here in Apple, and I want to show you something very cleanly. Here are the options in Apple. All right. So what I noticed this morning, that right after the opening, somebody walked in and bought 15,000 October 150 calls that expire on Friday.
Wow.
Now,
okay.
When you buy, and you can see the price and the delta forces them almost to hedge this 1-to-1. So they bought that many, they got to sell the stock. Or if I'm the seller, I have to buy the stock to hedge my position. So whatever that number is, that's a great, huge amount of stock. And that's the one thing I noticed first thing. I'm like, wow, did the volume in Apple just kind of flip higher by several million? And that was why. Now you see the coming in, the 148 calls. Maybe that's a spread, because you can see this goes. So when we're trying to determine oh, gee, the price of the stock, look at Meta, it just recovered. It was down 5, now it's up over 2. Bingo, check it out. The 135 calls have traded 23,000 contracts, and the volatility is 159%. The 135 calls realistically are worthless, because it's saying, I'm going to buy this option, which gives me the right to purchase Metaverse at $135 a share on or before Friday's expiration. And for that right, somebody's paying $7.75. What's the hedge? If I'm selling that to you, right, I'm going to go buy the stock and then looking to take the put back in. But that's just option talk. But what I'm saying is, like, hedging positions, when you've got massive amounts of options trading in these big stocks in advance of earnings, they're going to be hedged. And that produces a lot of movement in the stock, and a stock going up, right? We hit 124.5 this morning. We've already reached a high at 133. Check it out.
That's awesome.
That's a huge move in the stock. So this is kind of what I'm talking about. Now, add into all of this, I mean, I was truly expecting that we would rally this week simply on the basis of the market coming in and preparing for these earnings. But then I hear over the weekend, a lot of different things. Now, I want to add into this the reality. The reality is we are still under heavy duty inflation. I have seen no evidence being reported anywhere that inflation is receding even a hair. I've not gotten any of that. And we, as all retail, right, we are the ones that get to go to the grocery store, get to go to the gas pump, And those of you that live in California, we're feeling that gas pump squeeze big time versus other areas of the country. Also food. So when so to think that, oh, inflation's gonna, it's receding, it's coming down, everything else, Fed's got to pivot. Well, okay. Here's something else that I noticed. We got so much going on in Japan, in the Eurozone, and in the UK, in the Ukraine, in Russia, et cetera, et cetera, et cetera. Any one of these actors, so to speak, can jump up and just ruin your day. And right now, what I see going on in the market, dollar higher, they will start to sell this market. It's already come down off its highs. Why? Well, because the dollar was being sold. Sell the dollar, buy the market. Buy the dollar, sell the market. It's Pavlov's dog, and it happens just algorithmically. So what I want to kind of just bring into our conversation is, what do we feel about interest rates? So again, I'm going to take my share down because I think that I want to look at it technically, because you guys are my buds on the technical picture. And so I'm going to start with Sonny. If you wouldn't mind, put your chart back up. And can we look at the 30-year and maybe the 10-year and just kind of see what Sonny Bands is telling us?
Let's see. 10-year.
What's the ticker for the 10-year and the 30-year?
TY.
The ticker for the 30 is ZB, and the 10-year is ZN.
I'm having computer problems again. Sorry about this. Can't even find the mouse right now. Hang on. Yeah, Zoom has me locked out. Oh, there we go. There's the 10-year.
This is the 10-year. Great. Now, I will
Down,
say
down,
that,
down. Interest rates go up.
but it's a relief rally. It's
Tiny
nothing
little
more
one.
than just that this thing has been so kicked lower.
Yeah.
Um,
Well, and here, relief rally goes to the midline. Relief rally likely to go to the midnight line, 111.
okay,
You know,
and
so-
right now it's, where is it? 110 something, I think.
108, 109.25.
Okay. Yeah, and I'm not really sure what 2 points in the future equates to in rates, but it's
Yeah, me
not.
either. What was the other symbol you said, Michael?
ZB.
ZB.
That's the 30.
ZBH. Why did it put an H on it?
I don't know. Maybe that's
No. Yeah, I don't have it. That's not what it is on mine. So
But
we've
I
got
think
TY for mine.
right now
And
they're
you wanna
trading
look
at
at the 30-year?
118. Yeah.
Want to look at the 30-year?
Yes, please.
30-year bonds. Above the midline. Look at that. That's an interest. No, wait a minute. I'm sorry. That's the 21-day moving average that's dotted there. So here we are, down, down, 1, 2, 3, 4 days down.
Right.
So the 30-year is not as attractive to anybody as those 10 years are. Nobody wants to
Right.
go out 30 years.
Right. And if we had to really kind of think about this, I think it's like we're all really saying the same thing. But first, okay, but Wally, maybe you can just address it, and we can look at my chart, or we can look at Sonny's chart.
Yeah, we can look at either chart. That's fine. Again, I think as far as interest rate is concerned, when I look at the charts, they've been going down. You can look at this, even the 1-year chart on the daily time frame, and
Right.
it's just been down, 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 down. Like just even looking at what Sunny has right here, right now. I mean, it's like red candle after red candle after red candle,
Right.
in the last week or so. So again, even from a candlestick, anybody who understands candlestick patterns, from a candlestick pattern point of view, there are no bullish signals showing up anytime soon. That's on the daily. So the weekly is even worse, and the monthly is even horrific. And so,
Right.
It's kind of interesting, because I know that a lot of times people hear, or at least back in the day, I was like, oh, if the market goes down, the safe haven is bonds and stuff like that. And it's not happening this time. It's actually doing worse than the market is right now. And so I just don't see, I've been telling people to stay away from it for almost a year and a half now. It's just like, stay away, stay away. It's not where to put your money at this stage.
Right. I will agree with you on that statement, which I also get a little bit stressed out about when I hear a lot of analysts, and this was like back when we first started the decline and the correction, they were talking about back up the truck and load up on 10-year notes. And I'm like, oh my God. And what do you want to do now?
I wonder what happened to that truck right now.
I think the truck sank in the canal under its own weight. But it's even similar to where somebody, I think a couple of weeks ago, maybe it's a month by now, and they were talking about you needed to load up on TLT. Just get TLT calls, just buy them. And it's like, really? And that was just before the 30-year went from, I believe it was 136 down to 122. And when
does that analyst still have a job?
I don't know.
They probably do, because it's not about them being right or wrong. Most of them, they just put their opinions out there, so they probably still do.
But Sonny, if you can give me the screen back, there are a couple of things I want to just show, and then we can kind of discuss. Thank you. We're going to go back over to that chart, share it, and what I just to kind of show what I'm referring to, particularly in this. Look at that.
Oh,
this date is August the 1st.
Yep, that's what I was looking at.
So this is a weekly chart.
Yep.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's the 30-year bond has declined for a quarter.
Yeah.
Right? 3 months and a quarter. It's declined, and it's starting its next round lower. Now, if it's going to rally at all, okay, it's because it is extremely oversold on a weekly basis. But all of these moving averages are continuing. This is declining hard. This is declining hard. This is a 200 period, a weekly 200 period exponential, and it has turned lower. So relief rallies. I know that a lot of traders and retail people, they're looking to get back in because they only are comfortable being long. And here's something I want to suggest. That's great. You can be long and still carry a short position. Go to somebody and learn about the ETFs that are the ultra shorts. That you wouldn't be short them, you would be buying them when the market's getting ready to turn and the market's going to go down. Lots of things there. What I want to bring into our conversation right now is that we've kind of gone over the bonds, and we're all in agreement. Downside is not over. Relief rally is. The Fed pivot, I do not see. And the reason I don't see it is I see no evidence that their battle or their fight to get inflation under control is anywhere near being successful. And here is something that just is going to show my age. And that is that what I tend to do when we get into a situation of high inflation, where we're talking recession, where we're talking market turns and all these other things, I need to go back. I want to find out, well, what did the market do, or what happened the last time this occurred? Well, to be honest with you, the last time we've had to deal with interest rates and inflation at these levels was 1980. Unfortunately, there's 2 or 3 generations of traders who weren't there, who have never experienced this type of a situation. Now, here we got talk of Fed slowdown offers respite for bonds and stocks. So we've got the financial media rushing to talk. Well, we're all talking about the Fed rate slowdown. Well, that doesn't make it happen. I'm going to
I
tell you,
was
this is something else that I've used a long time. I
in
can go and sit in my
1980.
garage for 4 days. It doesn't make me a car. Now, what I want to add to our conversation is that we've got all this cross-pollination happening because of all of the currencies that are going back and forth and the problems that each one of those countries and or zones is experiencing. And how do we want to add that in? And how that gets reflected in gold, how that gets reflected in silver. And Wally, you had mentioned that the firm and that you made a great call in gold, and I think that's great. So if we want to update that picture, you got an Ellie account to work with. Gold is one of my favorites. So this is my Ellie account. I believe that we're in a C wave of an intermediate fourth wave, and I think that's where we're going to bottom down into here. So, and then, my friends, if this is truly the count, the other thing that I will add into this, and let's see if this jives with any of your work, Wally, that's really kind of what I'm going at here, is that in a commodity, particularly precious metals, it is normally going to be that fifth wave that is going to be the strongest. It's just going to be a blow off wave. And if I'm looking at it on an intermediate degree or higher, gold should find its bottom, and when it's ready to turn, it's going to explode and go above 2,000 faster than we've ever imagined. What could create that situation? Again, pick one from that's going on around the world. But on a technical basis, I'm looking at something that is purely technical, because that's what Elliott wave is. But Elliott wave measures human emotional reactions. Yeah.
That's a good point that you make. And truth be told, I can't say how far down it will go, but I like your analysis of, like, where it could go as far as the Fibonacci's are concerned.
Right.
I would say this. You're looking at the weekly. Can we switch to the monthly chart? And
we can.
And see, can you then use the Fibonacci's to kind of, I don't know, does it give you any insight as far as that is concerned? Because the way I'm seeing this is I don't know how far it's going to go down, but I do know that there are no signs of it ready to go back up yet. And if is it possible to zoom in that 3B at the top where it has that double top right there? Like, just zoom in that whole section. Yeah, right there. Excellent. So we can see that more. So yeah, so when I look at that, that was one of the first reasons why we called a top in gold. Was we saw that double top. We saw that where that B letter is at the very top. That's a top in pattern right there. Okay, some people will call it the inverted hammer, hanging man. We call it selling pressure. So when we saw that, when we first saw that, I was like, oh, something is not right. This was back in like March or something like that. I was like, wow, something is wrong with gold. I said, guys, watch out below. This is going to get nasty. And typically what happens is you'll also see, like, even have an RSI on here, you'll see that there's divergence taking place right there. Okay, from a double top, and then when you connect the tops of the RSI, that is divergent to the downside. So usually when you have a double top like that and then indicators are diverging, it's almost like it's a 80, 90, 95% chance that this thing is going to go down, and it's going to go down big. Okay, it did. And so at this stage, the question is, how far is it going to go down? And I don't have the answer to that, except for we'll monitor this every single week, and until we see new data that surfaces that says it's ready to go higher, we say stick to the downside for now. But my estimation is that we would, probably that purple line that you have down there, I won't be surprised if it reaches that level, to be honest. I really would not be surprised if it reaches that level.
That's the 200 period monthly, 200 period moving average. Both SMA and EMA, so they're kind of grouped together there.
Exactly. And here's the reason why. Let me do this one more thing. So
Sure.
the biggest reason why I say I won't be surprised that it hits that level is let's zoom out even more to the quarterly time frame. Do you have a quarterly chart on there?
I don't.
Okay. I wish you did. Click on time frame. See where you see that time frame over there? Yeah, click on that. And then just go to where it says 20 years interval and go to no, I'm sorry, not that one. The aggregation period. The aggregation period. Go to the aggregation period and click on quarterly.
Quarter.
And hit OK.
Look at that.
Boom. Right there. Okay. See, now zoom into that same time frame that we were looking at before.
You see we're coming right down to the 20.
Exactly. So looking at that now from a quarterly, it's like that's a double top, very clear double top. We still have divergence on the RSI, like you're looking at right there. That just tells me, typically what you'll see in a situation like that, you will find anywhere from 4 to 7 candles of the drop taking place. So right now, we literally have 3 red candles. And it's just, okay, if that's the case, then that tells me, we have this quarter, maybe next quarter at the very minimum, based on what I'm seeing here in a quarterly time frame. Okay, right. So at the bare minimum, if we get 4 candles, because usually when you have double tops like that with divergence, you can at least count on average 4 to 7 candles. And so this is what I'm saying. If we go 7 candles on this quarterly chart, God bless anybody who's holding on to gold at this page.
Well, I hear what you're saying, but we still could get the one thing gold has this beauteous thing of doing. You can see in this quarter, we've got 17 down to 60. We got about $150 at movement. Quarter closes, we start another one, it does another $150. We start another one, does another $150 or sideways. So we'll still possibly get them without gold really producing price damage, like getting all the way down. Well, that would be really far. But
yeah, that one is really far. We're talking about like maybe what was it, 1400, 1200 level?
I think that, yes. I think we have, first of all, we got these 2. But in terms of the wave itself that's in progress, I actually think it does have potential to get down to 1.618.
Exactly, which is that area right there.
Yeah, which is 1400.
Yeah.
But if you're playing gold for anything else other than just as a hedge against disaster in our own country, whatever could cause that, to where the dollar just went crazy and just devalued, or a lot of things that can happen. A war, a much bigger war than what we're looking at. Another factor to possibly, China gets its nerve up and decides, okay, now's the time we're going to make our move. Either you come in friendly with us, Taiwan, or we take you over. Who knows? There are too many things out there that really just kind of prevent a lot of things from falling into place because they're so uncertain right now. Now, quite often, gold and silver are more representative of uncertainty. The market used to not like uncertainty, but now it's seeming to embrace it no matter what. But in any case, and then we're going to kind of wrap it up, that I still favor gold, but Wally, I stand with you that downside's not over yet. So how does somebody want to play that? I think that's a conversation you have with your financial advisor. If you're your own financial advisor, you got to look at why you're holding gold and what maybe you can add to that position to give you some downside protection.
Correct. And again, honestly, it's one of those things where I always say that we have to be aware that we do not control the market, right?
We do not.
We don't control the market. Correct. So whatever forces that may be out there that causes things to reverse, they're the ones in control. I don't control gold. I don't control the market. All we can do is just read the data. So like you said, even if any one of these causes gold to start rallying back up, the thing was, we'll be able to look at the data at that point in time and say, hey, wait a second, something is changing. Let's watch and see this. So this is why I say I don't know exactly how low it's going to go, because I'm always aware that, look, at any point in time, something can happen, anything can happen that can change these things. But
Right.
again, if we were just to go by just data, and that's all we do is like trying to anticipate what could happen going forward before it actually happens. And you throw out your analysis out there. My analysis is like, yeah, gold is not in a good position right now. The charts from the monthly, quarterly, weekly are
Right.
not showing anything good whatsoever.
Right.
And until we at least see something that says,
Right.
oh, a reversal is beginning to surface, we're beginning to see signs of a reversal, until we see that, then all we can do is just keep on going with the trajectory that we have, which is, right now it looks bad. And I don't know how long it's going to take. I for the sake of everything, I prefer a bullish market than bearish market. It's so much easier to trade a bullish market, in my opinion. So we'll see how that goes. But yeah, I mean, honestly, this is the same pattern that you're seeing here is what I saw in cryptocurrency back in January. And I was like, I said, stay away from cryptocurrency. From what we've seen here, it could last anywhere from 4 to 9 candles on a monthly time frame. And here we are now in October, and it's like, yep, a lot of people didn't want to see that when it first started happening in cryptos. You can go GBTC on the monthly time frame, or even BTC on the monthly time frame. Just go to the monthly time frame on that, and you'll see like, hey, it's very similar to what happened in gold. See those same double top patterns right there? The same thing. It's the same thing we saw, and that's what we saw. We saw that. It's like, oh my goodness, I said, guys, stay away from cryptos for at least 4 to 9 months. Stay away from them. And this is because we're looking at this on a monthly time frame. The only difference now is I'm seeing the same thing on a quarterly in gold. And I was like, oh my goodness, if this is happening on the quarterly on gold, and we wait 4 to 9 candles, or at least 4 to 7 candles, that's 4 quarters to almost, 7 quarters. That's almost 2 years that I'm saying this could suffer. And here we are now in October, and it's like, yep, Bitcoin did suffer for 9 months. And that's kind of what I expect to happen.
Right. And I don't think it's over for Bitcoin. I mean, they're zoning in on the 200 period, the monthly 200 period EMA, and that's at 15,460. So yeah, it still has some room. And again, it's I think what also I like to interject here is that markets always correct. But as you mentioned, Wally, it is much easier to trade an impulse, a trend. Now, even with the trend down, it's a correction. It's the market is correcting after reaching all-time highs. So based on that, corrections, look at this. Even if we just take it from the pandemic low of March of 2020, my God, look at that.
Good point.
Massive
Very good
injection
point
of capital. So what we need to put into our minds, folks, is that there was $13 trillion put into the market there going into here. We go back to here, that was $8 trillion came into the market and gave us this. Now, 13 gave us this because we had to bail out the citizens, not the corporate, the citizens. But what got added into that 13 trillion was both of us, citizens and corporate, because we needed to keep the corporate going so they could keep paying us, the citizens.
Right.
The time has come where you just don't inject that much money into a system and then expect that it's not, that the money is going to continue to just roll. It doesn't. And the fact is, it's like there's too much money out there. So interest rates, and truly going back to that quick conversation that I started, if the Fed is serious about battling and winning the war against inflation, then what really needs to happen, folks, is they need to raise the interest rates higher than the inflation rate. What do we think that'll do? We're thinking, oh, they're so bold because they're raising it 3/4 of a basis point every other month now. Well, it goes back to what happened when somebody hired Paul Volcker way back in 1980. And he stepped in and he said, sorry, rates are going up and you're not going to like it and it's going to hurt. And they
those interest rates, I had a money market fund paying me 17%.
Right, because Fed funds were 18.
Right.
So
that could happen.
But the result of that, folks, is that the bonds, the yields went from that high level and they went down for 40 years.
Mm-hmm.
So can we expect a little bit more than an 8-month correction to straighten things out, going from 18 to 20% interest rates to 0? Should it take longer than 8 months? So right. to be impatient is to really not tell the true story about what's behind all of this and all of the excess. And now it's being wrung out. And in fact, a lot of these indexes are basically being held up by stocks like Apple, Amazon, Google, Intel, Meta, Microsoft, et cetera, et cetera, et cetera. If we go in and we start taking a look individually at a lot of the stocks in the components of the S&P, of the NASDAQ, there are a lot that have suffered huge losses. AKA Metaverse down 61% from its high, 61%. But still, we're gonna blast our way back into it. Now, I'm going to stop there. Say thank you very much to both of you guys. And let's go one more time around. And starting with you, Sonny, just again, anything you want to add, but how people can get a hold of you and anything like you had mentioned before, re-mention Sunny Side of the Street and other things that you offer.
Okay, thank you, Michael. I'm a mathematician, been trading for nearly 42 years, and a programmer. I love to mentor and consult people. I do one-on-one coaching, custom programming for people. I've authored 6 best-selling trading books. I'm finishing my 7th now. I do a free Sunny Side of the Street newsletter. Every Sunday night, I have a free live trading room on Tuesday mornings, free forums. And I forgot to mention a free podcast called The Sunny Harris Show. And I do love to teach people to trade. So you can get me at www.moneymentor.com, or if you want to give me a call, I'm at 760-908-3070.
Thank you, Sonny.
Thank you.
And Wally.
Yes, again, thank you guys for having me on the call. Always a pleasure to be here. But again, what we do is we analyze data, analyze charts from a technical, quantitative perspective. If the people that would benefit most from what I do are people who want to see the long-term range, a gaze into the future, so to speak, of what is going on with particular stocks, sectors, industries, et cetera, et cetera, et cetera. And so I always tell people, I said, if you're the type of person that has a 9-to-5, don't want to be glued to the computer screen each and every day, then my methods would really, really help you, because what we do is we see what's going to happen over a month, 2-3 months, and then position ourselves to be on the right side of the market. And so you can find out more about us by going to rightsidetrading.com, or you can contact us at info@rightsidetrading.com.
And again, I'm Michael Filighera, and I am with logicalsignals.com, tradershelpingtraders.com, and now the Eye of the Storm podcast.com. And I've been trading for a very long time, and I, like my colleagues here, I enjoy teaching. I enjoy sharing what I've learned about the markets and teaching that to other people so that they can try and hopefully become consistently successful or consistently profitable. My focus at the moment is more on day trading. I've kind of switched over and I like not having a position overnight. There is something to say about that. So I am going to say thank you very much to Sonny Harris and to Wally Olopade. And thank you, David, for allowing me the opportunity to come in and moderate today. And I'm going to turn it back over to you.
Sure thing. Thank you, guys.
All right, thanks. Yeah, ton of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app to get instant updates that way on all the future shows and events. Also, you can just go to TimingResearch.com and get access to this recording as soon as I can get it posted, as well as any of the past shows or events recordings. So I just want to thank my guests again for today. Sonny Harris of MoneyMentor.com, Wally Olopade of RightSideTrading.com, and Michael Filighera of TradersHelpingTraders.com and LogicalSignals.com. Thanks, everyone.
Thank you.
Thank you.
Thank you, guys. Take care.
Bye.
Bye-bye.